Hey YouTube, welcome to the Subprime to Prime YouTube channel. Here, our focus is to get you from subprime to prime, and it all starts with knowing where you want to go on your financial journey. Okay, so in this video, we're going to discuss what an optimal credit profile looks like. So, if you are wanting the best of everything with regards to, interest rates, opportunities for more credit, higher limits, and things like that, this is what your credit profile should look like. First, you should have a pretty high credit score. And a high credit score, to me, in my opinion, is a 750 or above. You're, moving your way into the excellent credit range there. And I mean, getting above an 800 is like, if you're going to be in the 800 club, that's like super exceptional credit. And I mean, it's not necessary, but it's always a beautiful area to try to shoot for. But if you land on 550, 7, excuse me, not a 550, that's terrible, but a 750 or higher, then you're in great shape. So you want to have zero late payments. Because as we know, late payments will tank your entire credit score. It will undo everything positive that you've tried to do to create a better profile for yourself in a heartbeat. And your credit score could drop up to like 200 points on a late pay. So, like I said, payment history is the number one factor of the 5 factors that make up your credit score. So you want to always, make your payments on time. And I always say, automate it if you can. Have that thing on auto pay so you don't miss a beat. And the next thing you're going to want to have are low credit card balances. You want to keep your utilization down, which is the next highest ranking in your credit makeup. You want to have, of course, no missed payments, no lates, excellent payment history, and utilization. Now, typically everybody says to keep your utilization below 30%. Now, it does work. It's not the most optimal, but it's that threshold where, okay, you can still make things happen with, 30% usage. But the optimal is under 10%. And I'll say anything within that 2 to 7% range is damn near perfect. They like to see that you are using the credit, but you don't necessarily have to be like super overindulging. And just think about it like this: over time, when you start building this credit profile, and let's say you're at the point where you have like 200,000 in available accounts to you. Well, 10% of 200,000 is 20,000, and if you have 20,000 worth of goods and services on your credit card, that doesn't put that much of a dent. But when you add another 20,000, and that's 20%. That's still pretty good, 40,000 out of 200,000. But you got to keep in mind that is debt, and you do have to pay that back. So lower utilization's always excellent when it comes to your overall mix. Now, you want to have different types of accounts. This is another section of the credit card mix, or the credit mix that makes up the overall profile. Now, you want to have a little bit of credit cards. Some people will say don't get more than 2 or 3 credit cards. 3 is a great number to start with. That's not crazy or anything by any stretch. But when you start getting more credit cards, just try to make sure they're not consumer cards, and they're like more like bank issued cards, which are so much better than consumer credit cards, because sometimes they can be trash. And you want to have installment loans, like your auto loans, or a cash loan. from a reputable bank, and maybe a mortgage on there if you are in a position to get one. But having a variety of different types of credit makes all the difference on the overall credit profile, because they know you can handle different types of credit products. Credit history, a long credit history. You want that thing to be 7 years plus, because you're still in that mid-range when your credit score is under that. Like if it's at 5 years, that's still considered fairly new. It's not too new, but it's not too old either. So you want to get up there and get close to 10 and beyond as possible. So that's when, if you're added to an authorized user and they have like 20 years of credit history, or 15, or even older, that just boosts up the age that you've been in the credit game, so it helps you out in the long run. Inquiries. Oh my goodness. Having a ton of inquiries will make you look thirsty, and it's a turn off to all lending and financial institutions, because you're out seeking credit and they're thinking you're having some kind of issue, and so they'll be reluctant to give you credit in that case. So you want to have as few inquiries as possible. And we know everybody from time to time will have to get an inquiry, but make sure it's worth your while. When you're in the building or rebuilding phase, you want to be strategic as hell with regards to what you're going to get an inquiry for. And I'm of the opinion that you better make for damn sure you can qualify for the thing you're going to inquire about, or get an inquiry about, because it's just going to sit on your credit report for 2 years. Now, it stops being as effective after 6 months, and then it's virtually not affecting your credit score after a year. But they'll still be on there, and as you're going through your credit journey, trying to get more products over time, I mean, if you have 6 on there, that's going to be a tough sell to get someone to loan you money. They're going to be like, okay, you just went out 6 times and tried to get money. What's going on with your situation financially? Now, another thing you want to have is a stable employment and address history, and those are going to be on the personal portion of your credit profile. So the longer you've stayed in one place, it speaks volumes about stability. The longer you've been at your job speaks volumes about stability. They want to see someone who's doing one thing and has been doing it for a while. You seem safe, you seem less risky, because they are risk adverse. They are not trying to, if you're hopping around from house to house every 6 months or every year, it's not going to look as stable as if you've been there for 5 years, or you've been at your job for more than 2 years, 3 or 4 or beyond. That looks safe to them, and they're likely to take a chance on you when you apply for different products. And then actively managing your credit. You have to actually manage all of this stuff going on in your credit. You have to look in case there's things that you didn't authorize on your credit report. I always say take a look at the credit report, because that is the foundation of how you'll be able to excel on your financial journey. Now, if you like information like this on all things finance, please check out Subprime to Prime on the School platform, and give a like and subscribe for more information and tips on helping you get the best out of your financial journey and go from subprime to prime. Thanks so much. Have a good one.